Hi everyone, and welcome to another live trading series. I'm going to show you how I sell monthly covered calls in my tax-free savings account and how I use it to earn at least 1% per month. I'm going to get some notes out of the way. I do monthly options, so around 30 days to expiration, and I usually aim for 1.5% per month. So my return would be 18% per year, so I could beat the market or beat the S&P 500. This time will be a little different, and I'll kind of explain it in a little bit. Another thing I want to address is when people say covered calls are risky and then you end up losing the shares and the underlying goes up, and it's kind of annoying to hear this because it's from people who don't have any experience. When the stock goes up, I can buy the call back at a loss and I can sell another one. I've been selling covered calls on Apple for 13 years now. I've made 106 or 107 videos throughout the past 6 years showing people how I do it. I even have proof that I was selling when I think Apple was like $110. I was selling monthly covered calls, and now it's $240 or $250 per share, and I still sell monthly covered calls, and I've been riding the stock upward for years, ever since I've had it. I created a separate TFSA for my for my YouTube channel. I have 900 shares, but for this purpose, I'm just going to do 100 shares, so it's a little more reasonable, and people are able to follow. People can't get 900 or 1,000 shares of Apple at this point, so it's just people just can't relate. I have 100 shares for the purposes of this video. I'm trying to make it a little more relatable. So if we go right into my Quest trade, I have 100 shares of Apple. Let's say the average market price, I paid $7,000 for it, and now it's worth $25,000 US. So let's just round up. So I'm up $17,000, and I've had this for, I don't even know, 12 years or 13 years. I've been buying and selling and increasing and decreasing my market price ever since the stock splits, but that's besides the point. So what I'm going to do is just make sure you have the options selected. Let's go into Apple. And now I try to do 30 days to expiration. Right now it's October 13th. The Canadian markets are closed, but the US markets are open. Usually I search for something close to the 25 delta. So it's this one right here, $340 US, but the market has been going up so much. I like to sell calls on green days. It would have been ideal if I sold a few last week or a few weeks ago. The market kind of tanked. Apple's up $3, 1.5% right now. So I feel like I'll get a little more premium by selling it today. I don't feel comfortable selling it at 260. I think it can hit that, and I want to keep the shares obviously. So I'm going to sell a little further out. I might go 270, which is like the 20 delta. And again, you can always add these by clicking over here. You can add any of these items that you like. I don't use row, which is the interest rate risk. So let's just calculate our return. So this delta means I have an 80% chance of profit. This is 75% chance. So if I guess I calculated it here already. Okay, there'll be an awkward edit there because my account got kicked out, but I'm back in now. So there's two ways to calculate this. If I sell one call for $240, my cost basis is like $7,050. So I'm making 3.4% for the 30 days. But since I have the $25,000, I feel like I should use the $240 on the $25,000. So I'm making less than 1% per month. Let's say 1% for these 30 days. I'm doing this because I feel like the stock will increase and my shares will get called away. So right now if I do 270, which is the strike, which you could get called away at, minus 248.94. So $21 increase divided by 248.94. The stock will go up 8%. So I'll make that, $2,000 plus I'll make the $240 that I made on the call as well. But I don't want to lose the shares. I want to keep it. So if the stock goes up 8% within 30 days, I will continue rolling it. I don't want to lose the shares. That's how I've been able to roll up to the $17,000 gain. So you know what I could do? It is risky to go closer. So I'll make $340 if I sell here. So $340 divided by the $25,000 that I have it's 1.36. And if I could do that for an entire year, it is a little risky. I don't want to lose the shares. So what I do want to do, what I have been doing actually, so in my other 900 shares, so sorry, 9 times 240 bucks, I've been making over 2,000 US a month just on my Apple shares. But again, it's like 210,000 locked up into one, and it's all like tax-free for now, but I'm not going to pull out. I'm just using it to grow my portfolio. I did a portfolio release I guess last year at this point, which it should all be higher, a little higher than that right now. So I have it lined up here on the side. I have the November 21st. I'm selling a call. So selling a call means I can be forced to sell someone these shares at $270, 100 shares, if it increases to 278% by November 21st. I don't think it will. I always have the right to buy it back at a loss if it increases. So everyone says, oh, the risk is you'll lose the shares. Why don't you just keep the underlying? No, just hold the underlying and then keep trading. You can close it at a loss and then sell a new one to make your money back. I rarely get breached. Let's say sometimes, I think one time I went 3 years without getting breached. But I guess that's a story for another day. So I have the 100 shares, so it's a covered call. You can only sell covered calls in your tax-free savings account. That's level 2. Level 1 is buying a call and buying a put. Level 3 is credit spread, so that's defined risk. Level 4 is naked trading, which is a cash secured put, which there's no such thing. It's a naked put or a naked call, which you're not allowed to do in your TFSA or RSP. You can do that in your margin account. So we'll click sell, sell to open. So my commission is $1. I make $235 and I get that instantly because it'll get filled. There we go. Now my positions are right here. I can I guess I can group it by options, strategy. There we go. So I'm already down $6, which is great. So -1 means I sold and I have 100 shares, so it's covered. You wouldn't be able to do this otherwise. And then the delta is 20, so 80% chance of success. I'm going to ride this up for 39 days. And then ideally it expires worthless. If not, I'll buy it back, which you can buy the exact same option. I'll show you how to do it. You can click on the option to open it up. And then instead of selling, if you buy back the exact same option, it closes it. Questrade does not have a close function. So I think that's it. Just showing people how to make 1% per month. It doesn't sound like a lot, but slow and steady wins the race. And then you can see that I've made $17,000 on this. So if you add the other 800 shares that I have, what did I do? 800, no, times 17,800. So another 142,000, which feels pretty good. So I've been doing this for a few years. I think that's it for now. I'm going to leave a link to Interactive Brokers if you want to click on it and sign up. I do think it's better than Questrade. And Interactive Brokers gives me more affiliate money if someone signs up, which helps out the channel. I think I'm going to leave it here. Thanks for watching. Let me know if you have any questions and tune in to the next one.